For sure, man, and definitely, and just letting our veterans know too that with their VA loan, they can really take advantage of the fact that they don't have to pay mortgage insurance on their properties, which is going to be very helpful for them, as well as that our veterans could actually get into homes a lot easier than your normal conventional loan programs, and
Mhm.
in some regards, a little bit easier than the FHA government program as well. So again, that flexibility of requirements, and also with veteran programs, they're going to have some competitive interest rates as we're talking about the interest rates,
Mhm.
and then the fact of like some closing costs for our veterans, right? So one thing that I've learned when I was doing when I first started doing loans for veterans is that they don't play about adding junk fees for veterans. Like they really look into that, and it's like you trying to charge
Yeah.
veterans the extra, broker fee and this and that. It's like they don't allow veterans to pay those fees a lot of times, man. And you're able to save money with the low closing costs. And one point of the closing costs that I really want to emphasize is that there is a VA funding fee added to your loan, which you're sometimes, if you have the funds, you could of course pay that as your closing costs, but a lot of times our veterans are adding that to the total loan amount. Okay, so if it's your first time purchasing, that's going to be 2.3% of the purchase price. So
Mhm.
that's a pretty substantial amount,
That's
going
crazy.
towards that.
Oh yeah. Oh yeah. Hey, bro.
Absolutely. So yeah, so what we want to know is that
Mhm.
one benefit that you know from working with veterans, with your company Veterans for Veterans, is that you can actually get that funding fee waived, right? How do you do that? Is that you want to have at least 10% service connection disability, right? So if you have at least 10% service connected disability, you do not ever have to pay a funding fee, which is very important because that funding fee goes up. It's only 2.3% when you're purchasing your first home. It actually goes up for every subsequent purchase as well. So again, but being service connected, you never have to worry about that. And if you work with a company like Veterans for Veterans, they can find 10% for you with behind your ears, which literally hearing loss and tinnitus, right? So that's one that you could definitely look into. And a lot of veterans suffer from that ailment, unfortunately, and you can, literally just because of that, you're able to possibly get 10%. Definitely reach out to Veterans for Veterans so they can help you with these different service connection claims, right? And now with it being so many homes on the market, if you're a
Mhm.
veteran trying to sell a home, a good key right now is that understanding that your VA loan is assumable, right? Which is a huge key when we're talking about and when we're getting to different elements of creative finance, and you hear people talking about all these ambiguous type of topics. It's like, what are they
Mhm.
talking about? Well, this is one of the things they talking about when they talking about creative finance, right? So actually, if you're a veteran trying to sell your home, you could make that loan assumable. It's typically easier if you're working with another veteran, but there's some different ways to structure that. But if you're willing to work that out with your realtor and include that in the contract, you're able to offer that veteran a more favorable interest rate, and it
Mhm.
might allow you to get your property sold a lot faster. Okay,
So hold
so
on, hold on. Can you give me understanding what is a assumable VA home loan? I don't.